The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 4th, fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly that's what it's all about. Let's make sure we've got an inspired weekend in front of us, and let's go look at one of our tools. This is the tool I call, or actually, I've taken this from Henry David Thoreau, who once said, "Humility, like darkness, reveals the heavenly light." You know, last night, as I took a walk, the skies were clear and I could see thousands of stars, probably millions of stars, really. The same stars that were out there when I took a walk during the day. But, of course, I couldn't see the stars during the day because I needed darkness. Have you ever been to the Big Island in Hawaii? I've been fortunate to have spent a bunch of time in Hawaii. I used to own retail stores in Asia, in Japan, and I learned the first trip over there was the hard way. It was like about a 20-hour trip from Florida to get. It was a really 24-hour trip to get from Florida to Hong Kong. And I learned that doing that trip was no fun. So I broke it up, and I decided to pick a pretty decent spot to just fly to first, hang out for a day or so, recoup, and then on my way to Asia. So I would do that on the way back as well. And here's what's so cool. If you've ever been over there, you know, let me describe to you when it comes to darkness. So the Big Island's one of my favorite places. And if you've ever been there, you know that astronomers on the island think of light as pollution because it interferes with the great many observatories sitting on the top of Mauna Kea. If you've never seen that, go Google that, go search it or what have you, because it's pretty incredible, awesome-looking sight out there. Now, the street lighting, which used to be low-pressure sodium fixtures, it's been replaced with LEDs during the past few years. And in Hawaii, they're serious about their darkness, especially on the Big Island. So while most folks think that darkness is not as valuable as light, you know, here at TFNN, we always talk about white light, right? Our good friend Lee Corso, he'd say, hey, not so fast. You see, the truth is, darkness, or the absence of light, is how most of us like to watch a movie in a theater. And when I wake up each morning to begin my day around 5 a.m., the darkness is exciting as it provides a time of peace and quiet. I get my best work done early in the morning when it's dark outside. My belief is this, is that light exists within each of us. Or said another way, our divine purpose of potential. I like that. Divine purpose of potential's got a dark background against which it becomes illuminated when we believe in ourselves, whether we can see it or not, just like the stars. You see, darkness is the foundation of our strength, and darkness can also be thought of as maybe humility, you know, our ability to admit that we may not know everything or be all things to all people. Trust me, being a radio commentator here, calling the markets, you better have humility in there, because we must admit that we're not going to be able to know everything out there. All we can use is a set of tools to help us project where price might go, where things might turn. And, you know, I believe that humility, though, if you really think about it, it represents wisdom. You know, it's the unseen. And the unseen, the beauty that exists within you and I, within each of us, is what makes us alive. Perhaps the next time you experience dark in your life, or maybe you know someone that's experiencing darkness right now, instead, why don't we look at the beauty of darkness as we need it to shine the light of our potential? Yes, folks, I believe Thoreau was right when he said that humility, like darkness, reveals the heavenly light. Let's go take a look at the stars in these markets out here right now. We've got the Dow futures. They're trading up 60 points, trade out at 16,561. S&P futures up 8, trade at 1891. NASDAQ futures up 17 points, they're trade at 3648. Russell 2000 up 5 points, trade out 1183. Goldilocks on the move this morning. She's up $15, up 12. Trade out at about $1,300. Silver up 32 cents. Trade out at $20.10. Light sweet crude up 87 right now. Trade at 101.86. Our call number is 877-927-6648. If you give us a call, Be happy to take a look at your stock charts. Let's take a look at what's going on around the globe out here. In Europe right now, you've got the DAX up 57 points, 0.6%. FTSE up 34 points, about 0.5% in Asia last night. Flat market in the Nikkei, although off 8 points, no big deal there. Hang Seng down 0.25%, off 55 points in the Shanghai, up 0.75%, up 15. Let's begin here. So we had the jobs report. This is Jobs Friday. Often a volatile day. We're going to find out whether this is going to be a pop and a drop. We can go back to a number of Jobs Fridays and see that took place. We had the economy added 192,000 jobs versus an estimate of 200,000. Do we really care about that? Well, actually, we do care about that. But what we really care about is what's the market interpretation as to what's going on. And got a number of emails yesterday about some of the tools. Really, it's been over the course of the last week or so. Today, I'll be filling in for Tom and Daryl during the Nadex show out here as they're both traveling. So during this hour, next hour, I'll make sure that I describe to you the tools that I'm using, why it is that I use them, because I use multiple different charting packages out here. I use only one data feed that comes from eSignal out here, and so we'll do all that. But in the meantime, let's go take a look at what the markets are doing now. The first place that we're going to start, and we'll flip back and forth. I'll flip back and forth between charts. But the first place that we're going to start here is the NASDAQ, is the NQ future. So I've got the daily chart on my screen right now. And the only tool that I've got applied to it as we speak is just simply, we've got the candlesticks, obviously. And they help us to identify what the bulls and bears, the actual sign painters of the market, are doing. And then I've got the TAS signal box, only it's displayed on the actual chart right here. And what you can see is at the price level here, and these are going to be some key levels inside the NASDAQ, at the price level of 36.65, same figure that we looked at yesterday, that becomes a resistance area on a daily chart. That's what we're looking at right now on a daily chart for the NASDAQ. Now, if price can get above that area, it'll likely rise to the next level of resistance here. No breakout in store for it just yet, which really are the highs of the swing point coming back to March the 7th, and that high out there at 37.33. So the NASDAQ is up at resistance. Why is that important? Well, from a momentum trading standpoint, and you go back and you can take a look at it. From a momentum trading standpoint, if this market is truly going to break out, and look, the New York Stock Exchange is giving us a message right now that it wants to break out. Why do I say that? Because it's above the 2007 swing point highs. It was the last one to join the fray out there, and it's basically moving above a big consolidation level out there. If this is going to be a true momentum market, it's going to be this guy or gal, however you want to take a look at, the NASDAQ, that has got to lead the market up. There is not a market out there. There's not a momentum-driven market where the NASDAQ and the Russell 2000 have not led the way up. Just go back, take a look at just simply coming off the bottom in 2009. And right now, it is struggling. What does it mean? I don't know just yet. I know that it is struggling out there, and that says we need to be cautious. Look, this right now inside the markets is absolutely a battle between the bulls and the bears, because if that's on the daily chart here for the NASDAQ. So if we switch over, we take a look at the Dow as an example. The Dow has been leading things up. I'll come back to the NASDAQ in a moment, too. We take a look at the daily chart, and I just apply the same tools here. By the way, the chart that we're looking at right now, this is from with Inside. This is the charting service offered by eSignal out here. So if we take a look at it, the Dow is up above its resistance area. Yesterday it tested the actual high. Let me try to pull this back here. The actual high from December 31st, 2013. Excuse me, I'll get that out. 16,439. In the Dow futures, I don't know if is that the high? Yeah, I think it is. In any event, you're trading at 16,553. But if you take a look at resistance here, it has cleared. The Dow futures have cleared resistance. That's what the message of the future. So we've got a little battle here, between the Dow futures. Same thing if I go over and I take a look at the S&P futures. If we do that for a moment, if we look at the ES Mini, it's trading at 1890 right now. If you were listening on yesterday's show, you'll see that one of the messages that came in off of the daily chart was if it closed below the level here of, 1880.50, that would be a rejection of a of a resistance level. And what did we do yesterday? Well, it actually formed a little doji candle out there. It says today, so now doji candle at a resistance level, and that clearly is a resistance. In fact, it was resistance set up by this little doji candle back here on March the 7th, and that is telling us that the market was confused, it was tired, it wasn't sure, it was directionless, and so we're going to find out today whether it is directionless or not. Now, when you take a look at these little signal boxes out here, just market profiles, they help us understand where orders are resting, where trading is taking place, where there's congestion, if you were to picture yourself driving down the expressway or not. Right now, with the market with price being above the resistance level, it's telling you that it's free. It's on the expressway. And it is out of traffic. It can put the pedal down. You see, there's no speed limit when it comes to the stock market out here, so it is above that area. Now, if today it closes back below 1880.50, the way that you trade these signal boxes out here is you can trade them as consolidation levels. That's one way that you could trade them, or you can trade them truly as a breakout, meaning price gets above resistance or price to the downside gets below support. Below support, you go short. Above resistance, you go long out here. And then you can take a look at some intraday trading or what have you. So right now, as we speak, and the trading session is far from over out here, we'll see what happens between 9:30, 10 o'clock in the session. When the bears really punch in for a workout here. But right now, 1880.50, that is the number to be watching. Why? Because it closed below 1880.50. That would also signal to me that the NASDAQ, which is up against resistance, will close below that level. And now you'd start to have some synergy in the markets out here. If we take a look at the euro, Japanese yen, I know many of you have been waiting to say, hey, Steve, what's going on with our favorite currency pair? Well, if we go take a look at it, let's look at it. Actually, I was going to do this here. Let me do this on the intraday time period. Let me do this. I've got about 15 seconds or so to squeeze this in. Here we go. Here's the euro-Japanese yen. Now, what the euro-Japanese yen did yesterday was it broke through that rising price channel. That's the black lines on my screen out here. And we can take a look at that this morning. Futures are moving higher, but the euro-Japanese yen, it's moving lower. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, take Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to that break there, we were talking about the Euro-Japanese yen. So if you're watching this on Tiger TV, and thanks so much for doing so, if you listen on the radio at TFNN.MOBI, or just simply the radio station out there, appreciate that as well. And I'll describe to you what it is that we are looking at here. Now, I've taken my screen here. This is one of the other tools that I use, Instant Windows. The data here is fed to me by the eSignal system out here. So, in fact, all 3 packages, all 3 charting packages that I flip back and forth between all being fed, in essence, by eSignal out here. Now, if we take a look at the 120-minute charts, we see here that the reaction in the futures market inside the S&P futures has been moving higher. You're trading at 1892 right now. And inside the Euro-Japanese yen, it's actually broken a channel. It's broken a trend. And it's broken it to the downside. Now, what it's done, if we take a look at coming from the recent low where it formed that nice little price relative strength divergent pattern out there. That was 5 o'clock in the morning back on March the 28th out here. Went from the lows in the 139-ish range all the way up to high, 143.46. Did that on the 3 o'clock in the morning on April the 2nd out there. Now, what we've seen since then, or what may be forming now, is so as it makes that high. Yesterday when we were on the air all the way through 11 o'clock, what we didn't have was enough information to understand whether or not that rising price channel was going to hold. In fact, after 11 o'clock, we just simply saw price kind of gradually move sideways. And it was not in an oversold condition out there. If it had been in an oversold condition, moving sideways would have been a whole different thing out here. So it's as if it was just kind of charging its batteries, although it didn't need to be charged, just to continue to move down out here. So we've got the futures moving higher. We've got the Euro-Japanese yen on this 120-minute chart here moving lower. Is that a problem? Yeah, it's a problem. There's no synergy out there. And that's really the liquidity gauge of the market comes from this currency pair. Comes from, it just does. You want me to explain it? I can't explain it. All I can do is explain it by taking a look at the charts out here. And until this becomes... Now, that doesn't mean that they can't become uncoupled from time to time. And when they do become uncoupled, when you do see divergence in the marketplace, I can tell you who's going to win that battle 100% of the time. Who's going to win that battle is going to be the currency pair, this currency pair specifically. And that's why we go ahead and we pay attention to it. So we'll see how today's battle transpires. Now, prices only made it to the 0.382 retracement. That's the first normal level of any kind of retracement inside the market here. If this 142 level fails, it says that price ought to get down to the 141.32-ish range out there. And so we'll see how things unfold. If we take a look at the daily chart, same currency pair out here, and then we'll go take a look at the daily charts for the futures contracts here. You can see you've got that 0.786 Gartley sell pattern. Now, I had a question that came in last night about when things, the confusion seems to be, may have been when you see a 0.786 Gartley pattern. That is different than a retracement to the 0.786 level. Total difference out here, because retracement can just be a straight line retracement. A Gartley pattern requires an A to B equals CD to the upside or the downside. In this case here, my experience is that when you have a Gartley pattern form, a 0.786 Gartley pattern specifically, and they work, because just price getting to that level doesn't mean that that's where price is going to stop. That's why I say you got to really be paying attention to the candlesticks out there, because they are going to show you the light out there. That's where you're going to turn darkness into light. And when they work, which in this case here it did, if they then fail, they will turn into butterflies more times than not. That is different than saying if price goes ahead and retraces to the 0.786 area, that if it fails there, then that is going to turn into a retracement. Or a expansion. That is not my experience. So I wanted to go ahead and be able to clarify that. Two totally different things. A retracement is totally different than a Gartley buy or a sell pattern. So I hope that didn't just confuse you even more. And if it did, well then I'll just simply try again out here. So we can see here that we have, what I see here is Euro Japanese yen rejected, an area of resistance back here at that 0.786 Gartley sell pattern. That's important for us to be paying attention to. So we've got this little divergence in the market with the NASDAQ and the Russell 2000 thus far having been weak up against resistance, and this currency pair here now trading to the downside out there. We'll just see how this plays out. You see, these are just a set of tools. Here's where the humility sets in. All that I can do is use my experience to be able to correlate these things and to be able to describe to you what is likely to occur. It guarantees absolutely nothing out there, but that's really what mastering probability is all about. That's why I named the newsletter Mastering Probability, because it's all about mastering probability, identifying when your back is up against the wall. Those are always the best time to spring forward, whether you're going to break out or you're going to break down. But that's when the trades to either go long or short are best. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 50 points, trading out at 16,576. S&P up about 8, trading at 1896. Composite up 18 points, trading at 42.55. Russell 2000 up $7.80, trading out 11.88. Semiconductors up 3 points here. We've got the XAU up $1.79. So we didn't talk about Goldilocks and silver, so we'll certainly have to take a look at that. Leading the charge, the upside, we've got Intercept Pharmaceuticals. That's up about $8 here, up about 2.5%. Anadarko Petroleum, APC, that's up about $4 or so. That's up about 4%. Mylan Inc., MYL, up 5%, up 265. To the downside here, leading the charge, we've got Netflix off $5-6. Halo Therapeutics down $3. Amazon off $3. Tesla Motors down a couple of points out here. Again, our call number is 877-927-6648. Let's take a look at what's going on with gold and silver out here. Let's take a look at the entire commodity. Not the entire commodity complex, but at least the four that we primarily follow: gold, silver, natural gas, and light sweet crude. So let's go take a look at it. Right now you've got gold trading out right around the 1,300 level. Volume so far today, about 76,000 contracts. What's that going into? 151,000 contracts from March the 27th out here. So you had a nice little bullish engulfing candle. So the bulls are really trying to defend this area here, this area being the low of April 1st now. The 1277.40. And with price release kind of moved sideways out here. So both of these candle sessions really qualify as bullish engulfing. So the bulls have really, identified themselves as far as where they are at thus far. Now the bounce has been fairly meager out here. We take a look at it from high to low, meaning the high that was put in on a key reversal session back on March 17th, out at the 1392 level, down to the 1277 on April Fool's Day on April 1st. What we'll see is it's got to go all the way up to 1321 before it just does a dead cat bounce out here right now. If I take a look, so, as far as what's going on with the gold here, is this a reversal here just yet? I don't know. That's my bottom line answer. I don't know just yet. A little suspect. I was expecting a little bit of a short covering rally. At that stage, we really haven't seen much of that at this stage here. So, little suspect. when it comes to Goldilocks at the moment. If we take a look at silver here, see what's going on inside of silver, trading out at about $20 or so, and it is it's still trading inside that consolidation box out here. So you've got silver trying to defend the lows here of $19.57. It's starting to make slightly higher highs, right? We take a look at it, just look at the extreme emotion of the market, the actual wick. So it's beginning to look a lot like bullishness. I thought you thought I was going to say Christmas, didn't you? But if we take a look at the bounce so far out here, still also we'll see fairly tepid. That means going from the February 24th low to the high to the low that came in on March 27th. And at $20.57 back out of the consolidation zone and back above the 50-day exponential moving average is where silver would start to look potentially bullish out here. So just kind of a sideways move. Again, higher highs in one essence as far as what it's producing out here, but not a lot of enthusiasm behind it. If we take a look at light sweet crude right now, light sweet crude here looks like it wants to head up to the 101.52. This has come out of a nice little oversold area, oversold bounce. This is the 120-minute chart that we're looking at. If we go from the high out here, which is 102.24, down to the lows that were put in back in about 1 o'clock in the afternoon or so on April the 2nd, you can see it was truly in the oversold level. Began working its way off by moving sideways, got a little bit of energy into it yesterday morning at 9 o'clock, started moving up. Now, what has it done? It's gotten into the overbought condition out here. If we take a look at the 14 period relative strength index, obviously not 14 days, looking back at 14 bars in order to do its calculations, but looks to me like 101.52 out here. We haven't seen a reversal just yet. Maybe light sweet crude going to make a run all the way back to the 102.24 area. If we take a look at the larger picture here for light sweet crude, let's pull it up on the chart here. Take a look at the daily pattern. If it can get above 102.24, if we take a look at retracements here, the 102.24 level, which was about your 0.618 retracement, then 102.88 would be the next target on it. So we'll see, in fact, what it can get together. If we take a look at natural gas right now, you've got natural gas. It is trading out at right around 4.45 out here. Our man Z in the Tiger's Den, he identified a 3 drive to a bottom pattern out here. That 3 drive was probably not on the continuous contract. Give me a moment here. I probably have that out here somewhere. Maybe I don't. What is it? Is it the May contract that we're trading right now? Let's see here. I've got KJ. When I've got the wrong contracts. I'll come back to that and add that during the breakout here. If we take a look at bonds right now. If you take a look at bonds, they're trading out of 132.15. They've got this support level right here, really traded right down into support. And support inside bonds was this little Morningstar reversal pattern out here, that being the low of March the 20th, 131.24. We can see how so far today, that has acted as a support level. It was tested here, may have been tested during right after the release of the jobs numbers out there, but thus far that has held. If we take a look at things that are popping and dropping in the marketplace, let's go do that. Put that up on the screen here. Data feed seems to be a little bit erratic here this morning. Must have a little internet data feed problem, so that's a bummer. But if we take a look at lead the charts to the downside, 27% to the downside here this morning. Halozyme Therapeutics. What's the announcement behind it? Temporary halt on their phase 2 trial out here, and this thing is just really getting the kibosh. So this is trading a big haircut here, down 26%, trading out at about 835. Volume so far in it has had about 4 million shares. Yeah, 4 million shares in this thing to the downside. Big volume session out here. Let's pull this back, see where this is coming down into, see if there's any volume bars out here where this is moving down into. So as we pull this back here, where's the volume bar? So it's trading right into the time period here, one of the larger volume bars inside this equity back in June of 2013, June 28th out there. you had 9 million shares. That's what it's trading into. We'll see if that continues to act as support. The low there, $6.14. The high, $8.20. Trading at $8.40 as we speak right now. But this thing taking out swing points with volume out here, and that's not a good thing. So this is a potentially much larger A to B equals C to the downside. Let's take a look at those patterns here. Now, on the 8-point, what we're going to use. Oh, come on. Don't do this to me. Let's see if I can pick that out. The 8-point right here is a trading session from January 24th. That high, $18.18. Your B point was this high volume bar that it created down at the lows. The B point being here on February the 5th. That low out there being $12.70. That's our B point. Come on, work for me. Work for me. There we go. There's our B point. Makes a retracement up into the trading session of February 25th. That's your C, $16.22 out there. That becomes a measured 1 to 1.618 is where this thing opened up this morning, right at about the 760, 780 area. It didn't actually get all the way down there. But the next level, if this area here does not hold, takes it down to about $5.54, which really gets you all the way back into that bar from June 28th, 2013. And that is on ticker symbol HALO, Halozyme out here, moving to the downside. You've got Intuitive Surgical now giving back some of its profits out here. Let's go see what kind of volume is behind its move. ISRG is the ticker symbol. This thing had moved up with some nice volume. I'm going to switch over to the other charting package here at the moment. I'm going to put up Intuitive Surgical, ISRG. This gave me a little bit of a cleaner picture, and I had some other patterns in here. So Intuitive Surgical had formed this big, huge island reversal formation. It did it here back on April Fool's Day on April 1st. Extremely bullish pattern out here. It's moved higher with some nice volume. This has been a little bit of an erratic stock out here, but it has moved higher with some nice volume. It broke out on April 1st with 2.8 million shares. The following session, about 1.4 million shares. Yesterday, another 1.2 million shares here. Pulling back a bit this morning, 126,000 shares. So now let's put this on a shorter-term chart out here and see if we can identify. Now, this obviously on the daily chart got into the extreme bought condition out here. So let's go use a 30-minute chart for the moment here and see what it is doing. So I can see what my problem is here. I've got a memory issue. Got something else that is running. I'm going to go to try to close that out here. That might free up some things for me, make things a little bit easier. So in the background here, I was running one of my trading strategy optimization programs. So that seemed to be creating a problem and an issue out there for me. Okay, so now we've got the what time period chart did I put up here? We've got a 30-minute chart here for Intuitive Surgical. So Intuitive Surgical right now, it's dealing with this little high volume. This is a 30-minute chart at 10 o'clock yesterday morning, the bottom of which is had 803,000 shares, the low of which is 519.46. You're trading pretty much right at that area right now. Let's take a look at retracement. So we're going to try to figure out where Intuitive Surgical may be traveling to. And depending on the volume, potentially setting up a potential buy. So we're going to just simply, from a retracement standpoint, come all the way down to the low out here at 10:30 in the morning, July 19th. Is that right? Yeah. Let me just do this here. That doesn't look right to me. In fact, it's missing a lot of data. So I definitely know that that's not right. So I'm not going to do the 30-minute chart for you right now. That's a bummer. I will do that. We'll take a look at it, but not until we have the data can we actually do that. So my apology there. In the meantime, let's look at some of these other. I'm going to take this off of here. I'm going to go over to a couple of. Let's look at the currency pairs. That's what we'll do here right now. Let's go take a look at what's going on inside the currency market. Let's look at the U.S. dollar, Japanese yen. So the U.S. dollar, Japanese yen, right now trading out at about 103.70. And let's take a look at a couple of different patterns out here. So here is a example of two Gartley sell patterns that have been in place. The first one that formed was a 0.618 Gartley sell pattern. If you're watching me on Tiger TV, that is the yellow shaded area out here. It formed a 0.618 Gartley sell. Did it back on March the 7th as it made a high of 103.74. Traded sideways for basically 1 day, 2 days you could say, but that second sideways day, which was March the 11th, that actually formed your reversal pattern. That was your bearish reversal pattern. Your bearish engulfing. You got some follow through. Price came all the way back to a prior area of support out here. That was when it got down to the area of March 14th, down at the low of 101.19. Forms an A to B equals CD to the upside here. Forms what looks like a 0.786 Gartley sell, right? You have nice, and this was obviously, I put this in ahead of time, so we must have done this early in the week, trying to identify where price, or maybe it was last week, where price might actually move to. Now, in this case here, you can see, if you're watching this on Tiger TV, nice Fibonacci numbers here. It was a 1.618 expansion of our B to C swing point to form what our projected 0.786 Gartley sell area was. Now, this is one of those situations where a failure of this pattern does not mean it turns into a butterfly, because this never took hold out here. This never took hold. This was just simply a projection area. That's why I like to be able to use candlesticks to help me identify reversal areas, because when you see the bulls and bears, the sign painters tell you that that becomes a reversal area, that's something that we pay attention to. In this case here, that is not the case. So I'm going to go ahead and delete this pattern, because it really doesn't have any meaning to us other than maybe trying to use some of the swing points to form an A to B equals CD. So in trying to clarify what I was maybe, when I talk about a 0.786 Gartley buy or sell pattern, when those fail, they turn into butterflies. But what I also mean is that means that they have to be patterns that had worked, that had confirmed out there, and you didn't get that here. So what has price done? In this case here, it's gotten just slightly above the 0.618 retracement level, or what we had marked as the 0.618 retracement level. We may find out here by now. I'm going to redraw this pattern. So we'll go ahead. This is using the Instant Windows software to do this, so I can draw this little Gartley pattern. And if we pull this out here, yeah, now it's light blue. Let me switch this. Let's just take a look at the retracement here from the high from January 2nd down to the low thus far that's been established in this, as we take a look at it on this page here back on February 4th. And what we'll see is prices above the 0.618 level, tried to make it up to the 104.42-ish range. That would have then, because when a 0.618 Gartley sell pattern, that's what is in place here, fails, the likely outcome is what? The likely outcome is that it moves to the 0.786 level to possibly form 0.786 Gartley sell. Now, the U.S. dollar, Japanese yen, has run into a problem this morning here. It's run into the sign painters. And those sign painters here have given it a key reversal session out here and a bearish engulfing candle. This high out here is going to be pretty significant inside the U.S. dollar, Japanese yen, out at 104.11. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles, sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Right now we've got the Dow is up about 12 points. S&P is up a point. The composite NASDAQ composite down 20 right now. Russell 2000 is giving back all of its gains. It's basically just turned slightly red out here. Semiconductor index is up by $1 right now. XAU up $1.60. So when we began the show, we were taking a look at the. I'll flip back to that chart here for a moment. When we began the show, we were taking a look at. See if I can go back to the actual futures area here. I had side by side the Euro, Japanese yen, and the ES Mini. Now, what's interesting here about the ES Mini? Couple of things out here. If you're looking at the left-hand side of the chart, and I think that this is important to take a look at. Now, remember, it's a 120-minute chart that we're looking at, and so this trading session on the ES Mini doesn't, it completes here in just a few minutes at 10 o'clock, so this is important. If we take a look at the lows where we came off of the bottom here nicely, this was back on March 27th, and what I've drawn here is a little rising price channel. And so what a rising price channel, instead of using the trend line, which would be using the extreme emotion of the market, that would be the bottom or the top of a candle here, what we're really using is the essence of price. And that is either the open or close of a session. That means the candle of the body. And if we take a look at it, what we've got here is a break of that rising price channel out here. And so that's important. That's the first break. Now, we saw the futures. They were trading higher this morning, and we just simply looked over to our liquidity gauge. That was the Euro, Japanese yen, which by far, hands down, again, you don't have to trade currencies, but you really do want to know what's going on inside the currency pair here, because if you go back and you take a look at the battles, you'll see it's this currency pair that wins those battles 100% of the time. Now, the 120-minute chart on the right-hand side of the screen continuing to move lower out here. It's below the 0.382 retracement. It's getting into an oversold condition. It's moving down into that level out there. That means that it's going to need to start resting here. So at some point in time, we ought to see the market, the stock market that is, trade sideways, maybe slightly higher, what have you. The key is the trend here. Is the trend now inside the ES Mini, which has been stronger, versus the NASDAQ? Is that now also starting to begin to turn down here? And the key is going to be for us to continue watching what goes on inside the Euro Japanese yen. So that's just simply going back to those charts out there. Had a question with regard to the IBB, the NASDAQ biotech sector out here. The question is, what are my thoughts about it busting an ABC to downtown? When we take a look at the IBB here, I've got the monthly chart. I'll try to cruise through this very quickly. I'll need to. Only have a minute to go. The monthly chart gave us a bearish reversal signal here last month, a bear sash candle. This month we see a little bit of follow-through. It should have some pretty decent support at about the 213.82 level. First level support should be 228.10. So the monthly chart not looking too shabby here, but we're going to continue to go inward because turns take place right on a 120-minute chart first, then daily, then weekly, then monthly. A weekly chart out here shows that until it breaks the low here of last week, that price point is about 228.69. Can't say. Whether right now it's actually just in a move here where it's made a retracement. The weekly chart is not overly bearish thus far. Doesn't mean that it won't move to the downside. It should have support at about 214. The daily chart shows that there are sellers that are in control. The Rhodes Momentum Indicator just identifying all these green boxes here, even on this bounce that we've had. The bounce just really running up into resistance here. So on the daily chart, it's got some trouble. So the daily looks like it's got some more room to go to the downside out here, and that is on the IBB. So folks, right now here, we've got the, let me go take a look, see what the exact is going on in the market. You got the Dow's up 25, S&P is up 3. Drop to start your weekend, your Friday. Have a terrific Friday. Thanks so much for joining us. I will be filling in for Tom and Daryl during the next hour, doing the Bull Bear Nadex binary option hour. Have a great weekend, a great Friday, folks, or I'll see you in just a few. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.